This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today I did nothing, which in my opinion is a good way to end what I think is a solid week of trading. Even though I'm only up not even 1 hour in the week, today I combated a mistake that has been holding me back in so many different ways that just absolutely has been trashing my performance the first week of this month and the second week of this month, and that would be market approach. This week I came to the market on all 4 days. I had one idea that I wanted to look for at the market open. I followed through with that plan, and it delivered all 4 days. There's not been 1 week of trading that I've had in the last 3 months where that has happened, where I've came to the market, I framed one idea, followed through with it, and it delivered. Although it delivered on all 4 days, I was only able to lock in equity on one of those days, so that shows that there is a skill gap there, and there's still things that I need to work on to be a good operator of my model. But I'm getting more and more comfortable with it as I continue to put in more reps and get more experience. I only get better at executing it. And so now I'm at the point where I'm extremely confident that I can attempt an eval starting next week after 3 months of trading on a demo. So shout out to my boy Lamp Trades. He reminded me of what I already knew. I am capable and I am a great trader. So we're going to go ahead and we're going to move on to the next level because I feel confident in myself and I just keep growing more comfortable in my model. So with that being said, let's get into it. So today's Friday, August 22nd, 2025. I did nothing today. So let's review the optimal market approach. How did I feel? Well, I felt confident in framing a bullish market approach today because I'm not seeing any reasons to go lower, but a lot to go higher. So this should be a high probability trading day. When I have all the reasons for the market to go higher and none to go lower, that means it's so one-sided. That means I have a high probability trading day on my hands. The issue with today is that we had that high impact driver at 10 o'clock. Powell is speaking at Jackson Hole Symposium, whatever's going on over there. He's talking, and you know that's going to move the market. That was the only issue with today, and that's a big reason why I didn't feel comfortable trading before 10 o'clock, even though what I was looking for was kind of there. There's also another reason I couldn't trust it. We'll get into that. So what's the draw on liquidity? I'm thinking the draw on liquidity is going to be Thursday daily high because it's left smooth, and I simply look for smooth areas in price. That's what I'm targeting because I know there's going to be liquidity above those highs or below those lows. So if Thursday daily high is smooth, I know there's going to be buy stops resting above that high that I want to target. So what is my bias? Bias is made up of 2 elements, higher time frame narrative and market criteria. I blend those together and get an idea of how I think the market's going to trade to the draw on liquidity. So higher time frame narrative, how Wednesday and Thursday have settled with the largest discount wicks and market criteria overnight dropping below Thursday daily lows, showing obvious market protraction is bullish. This tells me low of week is likely in Wednesday and market will push back inside the range, likely to rebalance the new gaps formed on the drop lower. From early on in the week. Sorry. I thought somebody just tried my door handle. I'm recording in a house with somebody who hates the fact that I trade. So I have to talk a bit quiet. And I thought that person was about to walk into the room. Anyways, with that being said, market criteria. I'm seeing obvious bullish market protraction as price drops below PDL in the heart of London, trades below midnight open, but comes roaring back inside the range. I like the idea of low day being in, and price now seeking to rebalance the range, then move for previous day high. So everything that I'm saying here came to fruition. Exactly. That's a solid market approach, but it was so clear and it was so obvious today. I'm sure all of y'all were also bullish today, and maybe you caught the long before the 10 o'clock driver, which is a bit risky because, of course, Powell speaks. You don't know what the market's going to do, right? So how do I think it's going to get to the draw? I would like to see pre-market buy side left intact as price moves lower to rebalance the overnight impulse swing. Ideally, the lower day remains intact, but it is Jackson Hole and Powell is speaking, so I wouldn't be surprised to see if 3/4 of that move gets overlapped before it goes higher. Because in Jackson Hole Symposium, we see railroad track kind of delivery. We see huge swings up, huge swings down. So if we made a huge swing up in the overnight session and it's Jackson Hole today and Powell speaking, I wouldn't be surprised if that move gets overlapped. So it could be a large move lower that trips shorts into the market, maybe makes me doubt the bullish bias too. So this is kind of what I was hoping for on the 10 o'clock news driver. That didn't happen. It literally just left. So the main idea I'm looking for is bullish premium gap opening, anticipating price to rebalance the overnight swing, deliver deep discount, then trade for previous day high. I am only looking for longs. And this simple change right here has improved my performance so much over the course of 1 week. Coming to the market, having conviction in one idea, and following through with that. Meaning, if I think the market's likely to go higher today, I am only looking for longs, and I'm ignoring everything that tells me that the market could go lower. I don't care if I'm wrong in that bias. I'm just wrong, and I'm not going to do anything. Because there's been so many times where I come to the market looking for one idea, I switch my bias intraday, and what does that lead to? Losing trades. And that is that's what's been killing me a lot recently. That's the number one constraint in my trading right now is market approach. And I'm getting really good at that right now, which is why I'm confident in finally attempting the eval. So, I could read all these, but it might take a while. So let's just cut to the chase and look at the 15-minute, get a good idea of what I'm looking for. So, you can see these highs are relatively equal. I know there's buy side above that, and that's a daily high as well. So Thursday daily high is left smooth. We have a nested new day opening gap. This is just a new day opening gap that's inside of another new day opening gap. We have the creation of buy side pre-market. We have this pre-market range. We have obvious market protraction that drops lower below the midnight open, trades below the midnight open. Already cleared the previous day low in the overnight session on this market protraction, manipulation, boom, right in the heart of London session 2. So the low day is probably in. So I'm noting that everything fits the market criteria of my bullish premium gap opening setup. So at the open, I want to see price leave pre-market buy side, it's created intact, and drop to rebalance the impulse swing. Optimal buy entries will be below the midnight open. So I was looking for a drop lower than that. I would have ideally seen the market come below the midnight open, didn't do that. But you can see that I want to see price leave pre-market buy side, it's created intact, and drop to rebalance impulse swing. So simply at 9:30, I'm looking for the market to drop lower. And this is at 9:25, you can see right here. I'm just looking for price to drop lower and give me something to buy. Now that does come to fruition. Quickly run through the other reasons why I was bullish on the day today. So let's talk about how I arrived at my higher time frame narrative. This is Wednesday's candle. You can see how it was a down candle. Now, ideally, if this move were to see continuation, what would have happened? This candle would have settled near its low, but it didn't do that. It came back all the way back inside the range, left this huge discount wick. So now it's a discount array that I have to read how price trades around to gauge whether the market is strong and should be bought or weak and should be sold. So annotating that level, extend it out in time, and we can see that Thursday opens, trades down below the middle of that wick, but it closed above it. What does that mean? That's a sign of strength. So this close right here tells me that the market is strong down here and should be bought. So I can anticipate a drive below this candle's low to fail and present buying opportunity. And it does. This is literally my entry mechanism that puts me into a trade when I'm looking at the 15-minute, the 5-minute, and the 1-minute. The same thing shows up on the daily because the markets are fractal, meaning they show similar characteristics across all time frames. It doesn't matter what you're looking at. The same thing that you see on the lower time frame is going to be the same logic and the same behavior in price that's applied to the daily time frame, the higher time frame, the weekly time frame, the monthly, the yearly, everything. Markets are fractal. So this, if this were a 5-minute time frame, this is a daily, right? Let's say this were a 5-minute time frame and I'm looking to buy the market, I don't know, as it's trading into a higher time frame gap. And the market shows me this, where it trades right down to the midpoint of the gap, closed above it. That's a sign of strength, which means on the following candle, I can anticipate a drive below that candle's low to fail. That's my entry model. That's what I look for to get to a trade. So let's say this were a 5-minute time frame. It's the same thing because markets are fractal. On the 4-hour, we also see this same information. This candle closed above it, as I already outlined on the daily. That's a sign of strength. This candle open, drops lower, takes that candle's low, closed above it. Overlap these down candles too. Look what the following candle does. Trades into down candles, closed here. 10 o'clock, boom, left. So my pre-market plan, I'm noting that we have a large open gap here. We have Thursday's highs that are smooth. So anything that you see annotated in the light blue in my pre-market plan, that's what I'm establishing as a draw, as a potential draw. So is the market likely to drop lower for sell side and take Wednesday daily low, or is it more likely to trade up to rebalance and imbalance? In this case, everything down here tells me that the market is strong and it's likely to trade up to rebalance and imbalance, which is this gap right here, and it ends up delivering that today. So what actually ended up happening today did not deliver in the way I would have liked it to. I had this 1 hour order block annotated, but I removed the annotation shortly before I made these screenshots, shortly before they open. Now, had I had that on there, see how price respected that on the 1 minute was just absolutely perfect. And that may have helped me trust this move a little bit more. Let me move these annotations. This is from my post-market review. So what happened here? I'll explain why I wasn't able to trust this move. First of all, we had the 10 o'clock driver. In trading yesterday, before the plethora of drivers that came out, let's go to the economic calendar. Oops, wrong calendar. So yesterday we had so many drivers, right? We had 2 drivers at 9:45 and another driver at 10 o'clock. Let's look what happened yesterday. So yesterday, I was bullish yesterday as well. What I wanted to see at the open yesterday was the market drop initially, set the snare, and then look to buy it. So this is literally the same setup that was presented yesterday that I would take. That is my model. The same thing showed up today. It didn't work yesterday, but it did work today. Now, because it showed up yesterday and I executed it and took 2 losing trades on it, I wasn't trusting of it today. I wasn't trusting of it because yesterday I took the exact same setup and it didn't work. So today, when the same thing presents itself in the same situation where we have a pending driver at 10 o'clock, yesterday we had pending drivers as well, the same thing, literally the same exact thing. I could not trust it. I couldn't bring myself to execute it. So the market drops, right? Takes the pre-market low, overlaps that down candle, and I bought this twice. I bought it here, and then I bought it again here, and I stopped out twice in the first 10 minutes market open. If we look at today, it's literally the same delivery, but this time that gap holds up and it works. So same thing, market drops, takes the pre-market low, overlaps that large down candle, overlaps the imbalance. This time I'm not going to buy it because I'm thinking about what happened yesterday. So this is a huge lesson today. Each day is independent of each other. What happened yesterday, I can't carry what happened yesterday into today because every day is independent. Every day is its own unique event, completely independent from what happened yesterday. So what happened yesterday does not matter and has absolutely nothing to do with what's going to happen today. Now, I carried the losses from yesterday into today, therefore I couldn't trust this move and I couldn't execute it on it. But even then, we still have that Powell event at 10 o'clock, and I don't really want to be in the market before that comes out. That just doesn't make sense, right? It makes sense. It's more professional to wait until that driver comes out and then see what sets up and then see what's present and then see if the market is giving me what I'm looking for. In this case, it just had a landslide move that just went right at 10 o'clock, right for the draw, and didn't give me anything to participate in that, which is fine. I'm just going to move sideline. I'm not going to do anything. I'll wait till Tuesday because next Monday is going to be a Monday with no driver, and I don't trade on Monday no driver anymore because I know that it's just not optimal for my model. So let's look at next week. We actually have 10 o'clock new home sales. It's probably still going to be shit. The day after that, we have an 8:30 and a 10 o'clock driver, so it could be better. Monday's not really optimal for my trade model because it's dependent on the higher time frame narrative and getting a good idea of how the weekly range is likely to paint based on how previous day candles have closed. Monday is just not optimal for that. So today the market gives you what I'm looking for at the exact PD rate I'm looking for it to form. I just would have liked a deeper retracement on the 10 o'clock driver. I would have liked to see it manipulate down first. In this case, it just went right for the draw. What can you do? Nothing. And it made such a huge move at once. It went up 190 handles in 1 minute. When the market makes such a landslide move like that, I'm out. When the market makes huge landslide moves like this on any high impact driver, what's the condition afterwards usually like? It's usually like this, where it does nothing. Look at all these small range candles of 1 handle, 2.5 handles. You can see the range of them right here. This one's less than 1. Like, look at all this. You're not going to trade this. This is just literally like an intentional repricing of the market higher by whoever's in control of this thing. And so as soon as I do this and do this landslide move, almost 200 handles in a single minute, I know that the condition is going to do this afterwards. I know that manual intervention is underway. The hand is in there, and I'm done. So I see this, and I'm like, okay. Delivered exactly what I was looking for, but wasn't able to be a part of it. That's fine. Still a win in my book. Still a good trading session in my book, especially if there is no risk on today. I didn't win anything. I didn't lose anything. I didn't do. In fact, I mean, I came to the market I had an approach and I saw it deliver. Perfect. That's good. That just adds to my reps and my experience and makes me more confident on future trading days when the market sets up like this, because it's going to do it over and over and over again. And I simply add it to my database. It's already documented in the database. Come on now, you guys know me. It's already in the database, and I already have everything that I'm looking for within the realm of my model. Oh shit, I'm sorry. I just lied to you guys. It's not in the database. Don't worry, I'll upload the pictures right. Oh my god, I deleted them. Okay, hold on, I have to take care of that right now. Let's see. Here they are. Restore the selected items. Okay, 1, 2, 3, 4, 7. Boom, there we go. Now we're good. Okay, now it's in the database. Oh shit, I think I'm missing one. 1 hour, 4 hour, daily. Did I not get the weekly? Looks like I'm missing the daily. 5 minute? No, it's a 1 minute. 1 minute, 5 minute, 15. So this is how I organize them. A little bit of insight into the daily database that I've created. Not even a daily database. This is just how I'm using to study my trade model. This is just the system that I've created to study my trade model. So I'm missing. Okay, I don't know what's going on here. Let's just go ahead and delete these. Boom. Try it again. Come on. Okay. Okay. You know what? I'll take care of that after this video is over. Anyways, that's kind of pissed me off. Like, come on, just load. I'm extremely OCD about shit like this. Okay. Oh, look, here's the other thing that I'm working on right now. Okay. So I'm framing the narrative behind 4 elements of the higher time frame narrative that I have discovered. First one's going to be development of the weekly range. The second one is going to be settlement, how the candles close. The third is going to be economic calendar. And the fourth is going to be the near-term condition, because I'm a near-term trader. I'm a short-term trader. So I only really care about the near-term condition, what the market has done over the past few days, maybe even the last week. So based on the development of the weekly range, these are all the reasons that I can anticipate reversal higher to be bullish. This is what I want to see when the market is building the low of the week. This is what happens on Monday. As that weekly range is painting bullish, it can close as a down candle, can close as a large up close candle, can close indecisive. If it closes indecisive, then I'm anticipating this. If it closes as a large up close candle, then I'm anticipating this to happen. If it closes as a down candle, then I'm anticipating this to happen. If Tuesday closes as a large up close candle, then I'm anticipating this to happen. So on, so forth, so on, so forth, all the way through the end of the week. And then reasons to be bullish based on how the previous weekly closed. If it did this, 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 or this, then I can be bullish on this candle. Reasons for the be bullish on the previous day range settlement. If it does this, 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 or this, then that is an indication that I should be bullish on this day's candle. So just all these reasons annotated and listed out here, because I'm really trying to understand higher time frame narrative, because that's all it is. ICT literally said it himself. Your model is centered around draw on liquidity. How do you arrive at draw on liquidity? These are the elements that are going to help me arrive at draw on liquidity and give me an idea of what direction the market should trade in. If I get really good at this, and I get really good at daily bias, and I get really good at coming to the market with one approach and one idea and holding conviction in that and confidence in that, then it's going to improve my executions today. Why? Right? Because I'm only looking to be a buyer or seller ever. I'm never looking for both, and that's it. So that's just the work that I'm putting in outside the charts, things that I'm working on right now to fix the number one constraint in my trading, because I watched a video on YouTube, kind of got me thinking, had me inspired a bit. You have to know what you should be prioritizing right now, because we all have the same amount of hours in a day, right? Why do some people get more stuff done than others? Some people get a lot more done than others. It's because they have priorities. They know what their number one constraint is, and they know to make that a priority, and they need to put all their energy and attention into this one thing, because that's what's holding them back the most. They have their priorities straight. There's so many different things that I can do out there that I think could make me a better trader But that's not going to move the needle the most because that's not what's holding me back the most. So you have to identify what's holding you back the most and attack that, which is what I've done right now. I've said it multiple times throughout this video. The number one thing holding me back is my market approach. If I attack market approach and I get really good at market approach, then I'm going to improve the most as a trader. That's going to yield the most return for my input. If I focus on my main constraint is market approach. I have to get extremely good at coming to the market with one idea, holding conviction in that, and following through with that. That is it. So today the market delivered what I was looking for, but I didn't execute it on it because I carried what happened yesterday into today, and because of that 10 o'clock driver, didn't really make me confident with that idea. So that's gonna be it for this one. Short video. I gotta get to my girlfriend's house. She's wanted me to come over. It's hard work taking care of a girl. You know how it goes, right? So talk to you later.